we've been tasked on this panel to look at the increased use of Japanese banks and Japanese financing tools for international owners. I'll just start by introducing the panel, and then we'll move to the questions. From my left, Ali Ben Lmadani, Chief Executive Officer of ABL Corporation. Ms. Lmadani is a strong market leader and forward thinker and has developed a number of successful alternative investment models in the industry. Next to him, Mr. Vetle Sjuve, Associate Investment Banker at Fearnley's Securities. Mr. Sjuve joined Astrup Fearnley's in 2015, and he's also worked in the Fearnley's project finance team. Next to Mr. Sjuve is Takahiro Matsumoto, Managing Executive Officer, Structured Finance of Financial Products Group. Matsumoto-san is Head of Structured Finance at FPG and has responsibility for origination, documentation, pricing, and administration. He has over 20 years' experience of structured finance and previously worked for Nomura Babcock & Brown and Showa Leasing. To Matsumoto-san's left is Mr. Koichi Onaka, Global Head of Financial Institution Group and Global Head of Ship Finance at Sumitomo Mitsui Trust Bank. Onaka-san is also Managing Executive Officer of Sumitomo Mitsui Trust Bank. And finally, on the far left is Mr. Jigo Hayashi, General Manager, International Shipping and Finance at Tokyo Century Corporation. Mr. Hayashi has over 25 years of banking and finance experience and has previously worked in Tokyo, Hong Kong, Singapore, and New York. Since joining Tokyo Century Corporation in 2017, Mr. Hayashi has responsibility for establishing, leading, and expanding the company's ship finance business in Europe and North and South Asia. So I think just to give sort of a flavor to the discussion, if we could just go through the panel and just talk about the financing products that are available from Japanese institutions to international owners, and the products that you most commonly work with international owners. Would you like to start?
Good morning. Well, first of all, I need to give a little bit more detail about ABL. We're mainly an aviation shop. We started shipping about 6 months ago. We have an exclusive JV here in Japan with the SBI Group. SBI Group being the 4th largest financial institution in Japan. They already did 10 ships so in the last year, and we are looking at more ships to do this year. We have a capacity of about 400 million of equity, $1.5 billion per year that we are investing in aviation and shipping. The first 10 ships that were done last year were Jolcos, and we're looking at more ships like that. So the Jolco market, we see a lot of appetite for it. We see that shipping is becoming more and more sophisticated. Coming from the world of aviation, where we did a lot of Jolco in aviation before, we see a lot of similar structure in the shipping being developed. Also in the Japanese market, in addition to the Jolco and the Jol market, which has tax products, as I think some of you know here, we see more and more yield-driven investors. We see a lot of equity yield-driven, similar to the US, in Japan. So the Japanese investors are becoming more and more sophisticated about the investments in shipping. We saw it in aviation and now we see it in shipping, where they don't want only tax play, they also want equity yield. So that's why we see more and more interest in this industry, especially coming from Japan.
Yes, I think in terms of, or from the remainder of the panel, we don't represent any specific source of capital, being an investment bank. So we work with a full range of capital sources there in Japan, ranging from conventional mortgage debt to finance leases, operating leases, and also Jolcos as well. So I think all of them have different features, which we'll probably touch more upon later in the panel debate. But we're not sort of biased in any way in that sense. We always work with all of the different sources and even in combination sometimes as well.
FPG is the independent equity underwriter for Japanese operating lease Jolco and Jol product. Our market share in the Jol and Jolco market about approximately 30%. And we deal with the aircraft, vessel, and container box. And the aircraft comes from the about 60% of our business. Shipping is about 25%. Remaining 15% is the container box. And we are mainly focusing on the Jolco product, and we have more than 4,000 tax accountants to sell the equity to investors. Also, we have a partnership with the regional bank, about more than 100 regional bank, and we are selling the equity through our branch all over Japan, about 10 branches. Jolco current market is gradually slowing down due to the Chinese economy, also the trade friction between the US and China, but still stable situation. We like to find more deal for that in the future.
Hi, good morning. I'm from Sumitomo Trust and Banking Corporation, which is one of the subsidiaries of Sumitomo Mitsui trust holding groups. Well, we are completely independent trust bank, which is different from our SMBC. The name is pretty similar, but just like JP Morgan and Morgan Stanley, this is very, well, the historical root is same, but now we have no the capital relationship, anything. At this moment, the exposure to maritime business of Sumitomo Trust is approximately 14 billion US dollars equivalent, which is the biggest in Japanese banking sector, out of which are approximately 15% of all the 14 billion US dollars is exposure to international global players. We are providing the senior loans with the vessels pledges and the mortgages, and also we are providing the credit revolving facilities to mainly the shipping operators, and also we are providing the senior loans to Jolco structures and sales and leaseback structures, and so on.
Good morning, everyone. My name's Jigo Hayashi. I represent Tokyo Century Corporation. A bit of our company introduction. We are a leasing company with two strong parent backings, Mizuho Banking Group and Itochu Corporation. But rest assured, we remain very independent and have more responsibilities to serve the client's needs. Our loan balance sheet commitment to the sector is 1.4 billion US dollar. Unfortunately, 1/10 of the size of Onaka-san's SMTB, but we are very determined to serve the clients in terms of the best needs. One key feature of Tokyo Century is we are one stop. We serve clients across the capital structure. We not only provide mortgage financing, multi-tranching, finance, operating lease, but we also provide Jolcos. And if you look us in the Japanese capital markets or bank funding, please look us as a place to be, as a first stop. Thank you.
Thank you. Sounds like a nice speech. Mr. Lmadani, you mentioned the move more from aviation into shipping and the growth possibly of the Japanese financing market, looking at the shipping industry. Would the panel like to discuss any other trends they're seeing in the Japanese finance market, sort of vis-a-vis international owners? Would you, yeah.
Sure. Well, still 80% of our business will still be similar to FPG, will be aviation, and 20% will be shipping. But one maybe trend that we see is the change of tax regulation on the debt side. That's why we need to come to SMTB and the other guys that are very strong on the Tokyo branch. And thank you for the sales pitch, by the way. We're going to come to you for sure. But that change in the tax regulation in aviation and in shipping, I think will have a big impact. We're worried if the Japanese banks or the banks with Tokyo branch will have enough capacity to cover the Jolco market with that new regulation. That's one of our worry about it. I think that's one of the changes that we saw in the last year. I think most of us on this panel are worried about it. But still, we need to be very good partners with local banks, or banks that have Tokyo branches, because they will be only the ones that we can do a Jolco with. So that should be one of the big changes, I think, that should be in the industry. I don't know if FPG agrees with me on this vision on the Tokyo branch lending.
Matsumoto-san, do you want to say something?
Change of tax law regulation is to some extent have impact our business, but on the other side, some of the bank who was not involved in the Jolco transaction step in the area of Jolco has a new business opportunity, such as the Hong Kong Shanghai Bank started the new business again. So we can find the new bank, and as Alison mentioned, the regional bank is very interested in providing a loan for the Jolco transaction. So we are not so pessimistic about the change of regulation.
Well, as a senior provider of the Jolco structure, to be honest, I'm really worried about the change of the tax, the structure. Well, and also the other concern is the introduction of IFRS, which will not enable the ship owners to off-balance their vessels in their balance sheets. However, well, I mean, even the change of some tax structure happens, still, I mean, not Jolco, but a similar type of structure would be the sustainable. And well, also, I think the key is here, who is going to provide equity part of the vessels owning structure. And when I take a look at the global markets, there are some the banks and the funds who are providing the equities to vessel owning structures. And as the trust bank, which is the asset manager, the biggest asset manager in the Asian market, are exploring the opportunities to setting up that kind of new type of funds or the structures to for the investors.
I think the rest of the panelists have largely given a very good headlines, but from my side, I'd like to sort of echo 3 messages to you today. One is, Jolco is not for every people's transaction, and we believe it's a tax-based leasing product. We, Tokyo Century, as an institution, is very responsible in terms of Jolco underwriting, and one message or one criteria we really are very serious about is the 4 C's. 4 C's. It's not the diamond C's, okay? The 4 C's. Credit risk, caliber of owner, core asset to the business, and again, the call option. These are the 4 key features that we really do take good interest in. Of course, if the client does not fit in this criteria, we don't recommend Jolco anyways. Thank you.
Thank you. Leaving aside Jolcos for a moment, in respect of conventional bank financing, would the panel like to discuss some of the advantages and disadvantages for international owners of seeking financing from Japanese finance institutions? Perhaps, Mr. Sjuve, you'd like to start? Do you want to?
Yeah, that's fine. So I think whenever we speak to our clients, what are the benefits of going to Japan to raise capital? The first thing that always comes up is obviously that the capital is quite competitive as opposed to what you can see in other parts of the world. It offers, depending on who is the counterparty, whether it's a bank or it's a Jolco or it's a leasing company, it offers different sorts of flexibility and other benefits. But I think especially from, let's say, the institutional investors or local owners, they have seemed to be less cyclically oriented than what we have seen maybe the banks being. But I think what you see come through for all of the capital sources is that it is very competitive and it offers quite high LTV. So that goes obviously as a trade-off of flexibility, and sometimes also things tend to take a bit longer time in Japan than what we see in the West as well.
Thank you. Onaka-san, would you like to say anything on conventional bank financing?
Yes. Well, conventional bank finance is nothing fancy. However, I think at this moment, in Japan, there is still massive capacity for the shipping finance space. Firstly, especially in regional bank sectors, they're exploring the opportunities to finance in a shipping space because it's really difficult to find any other spaces. So, which means, if the borrowers take advantage of a very low interest environment, they can achieve fairly advantageous finance the deals with Japanese regional banks. However, including ourselves, the one concern is US dollar funding. And we do not see any, how can I say, the exposure limit to the global clients at this moment, but probably in a funding side, we are going to see some limits to expand our US dollar financing to shipping space.
Thank you. Would anyone else on the panel like to say anything on that topic? Sure, Hayashi-san.
Just to add Onaka-san's point, the Japanese funding pool is still abundantly available, but this is only true for Japanese yen. As Onaka-san mentioned, for dollar, there will be at one point where the Japan premium will resurface. So obviously, you have to have a good currency portfolio mix down the line and be thoughtful about tapping the Japanese market.
Thank you. And now if we move to JOLs and JOLCOs, maybe we could look at some of the advantages of the JOL and JOLCO structure for international owners.
How long do we have? Well, let's start with Jolco, which is the easy one. Jolco, of course, the problem with Jolco is that it has to be good credit. Same in aviation. You mentioned the 4 Cs. I fully agree with you. The call option, of course, is a big issue. People forget that in Japan, if you don't exercise the call option, you can never enter the Japanese market ever again. Like in aviation, you have people that didn't exercise call option like 10, 15 years ago, and they're still not able to enter the market. It's a market that never forgets. The good thing about it is a market that once you enter it, it's a very loyal market. On the Jolco market, if you're able to do a Jolco, you can do a lot of them. It's cheap cost of financing. The issue with this will be the debt. On the debt side, finding debt in US dollars is a little bit of an issue. But the Jolco is the cheapest cost of financing that is available today. But you have to be good credit. You have to be a reliable partner that is going to exercise the call option, of course. And it needs to be a partner that never, ever will consider not exercising the call option. But once you enter... then you never enter it, as you said, the 4 Cs.
Comments.
But that's a very important thing on the Jolco side. On the JOL side, we never did shipping JOL yet. I think FPG did. But we did a lot of aviation JOL. I think it's similar, but it's one investor usually, which is a little bit more about yield. You have to have a higher yield on the JOL side. But also in Japan, other than Jolco and JOL, what we see more and more is investors that want yield, that are looking for yield. We have to forget just the tax play. We also, I know I repeat myself, we have to also remember that the Japanese investors are becoming more and more sophisticated. And those investors are competing with, of course, New York and other financial platforms. And they want yield, they want equity yield. So if you don't fit in the Jolco JOL, don't say that I shouldn't come to Japan to look for investors. Of course, there's still investors that are looking for yield, and the Japanese investors are becoming more and more sophisticated in this industry, as they did in aviation. So it's an exciting market to be in. I don't know if, because we do something similar as FPG, I always go back to FPG, but I don't know if you agree with me on this view or not.
I will supplement your view. First of all, Jolco has a merit, also demerit. Merit is a 100% finance, also the low-cost finance. Demerit is the Jolco lacks the flexibility, especially for the not allowing multiple purchase option to the charterer due to the Japanese tax reasons. So if the asset is the core fleet, in that case, a charterer is willing to hold or intend to own the asset, Jolco will fit. But if the market is good, charterer would like to sell the asset, that's not fit for the Jolco transaction. So for when we structure the deal, not only the criteria, also we check the asset, whether that will be very important asset or not. In the worst case, some of the charterer may have a difficulty to exercise the purchase option. If that is a core asset, likelihood of the exercise the purchase option is high. If not, they may return the asset. That's the worst case for us.
Just to add on that, I think there's probably one quite important capital source in the Japanese market that's not presented on this panel, and that is the institutional investors and local owners. And as opposed to the Jolcos, they do bilateral finance leases. I think one of the drawbacks you mentioned with the Jolco is the lack of flexibility. And I think what we have seen to an increasing extent also from the local owners is, and also some of the leasing companies as well offering finance leases, is increased flexibility. So they understand that shipping is a very volatile industry, so flexibility is needed in order to conduct asset plays in, for instance, dry cargo or tankers. So we see also a lot of, in non-Jolco or non-syndicated finance leases, we see more and more flexibility coming into play as well.
And do you think that's mainly because the financier is looking at the credit of the Japanese owner rather than the international operator, or you think there's another reason for that?
In my opinion, I think that is mainly to do with the competition from the West, because we see leasing opportunities and finance sources in the West also becoming more and more competitive on the cost side, but they offer a lot more flexibility. So I think it's just some of the more internationally oriented leasing companies and investors, they are willing to give away that flexibility just to stay in competition.
Thank you. Onaka-san, Hayashi-san, would you like to say something about the advantages of Jolcos, or is there nothing more to add?
I'll keep it for later. I'll keep it for later.
Okay. I think we've touched on quite a few of the criteria that people look at when evaluating whether or not an international owner will be suitable for financing. Would anyone on the panel like to add anything specific about anything maybe particular to international owners?
Well, as a bank, the disclosure level is surely most important factor. As far as we do business with listed companies, yes, we could get, well, not very sufficient, but at least well, the information which we can go through. However, when we try to do business with unlisted, for instance, family-owned the companies, well, it is very difficult for us without very strong cooperation from those new customers to provide the very detailed information to us. That's the first comment from the bank.
May I just add one point? One of the challenges the Japanese financial institutions have today is credit risk. Majority of the credit cases are being tabled to the credit committee based on counterparty risk. And what I mean by counterparty risk is purely on balance sheet basis. People penalize anything under EBITDA line. If there's impairment, and if it's a net loss, the credit committee says no. This is fundamentally a misguided credit principles in being one of the key responsible financial institution. What we are trying to develop internally, and also this is against the international benchmark, is we try to assess the cases based on asset-based risk. And this is something we're working very hard. And I'm sure going forward, we will be able to provide cases which has a good complements, not only based on pure counterparty risk, but it's based on asset-based. And this, we believe, will be the, I would not say panacea, but will probably provide additional capacity into the market for the maritime sector.
Well, may I make some comments on that? That's very good the points, Son. Well, yes, Japanese banks have to categorize each the customers based on their FSA, regulatory guidance base, which doesn't allow to, well, lend money, for instance, their continuous rate figures for 3 years, for instance. But now that the phenomenon has been changing, and as he mentioned, we can now develop our own the rating models based on the cash flow. And at the same time, even the Japanese bank ourselves are shifting from counterparty credit risk based approach to the mixture of even more asset-based the approach, which would be able us to develop the businesses with global the players.
Thank you. I think then moving on to the type of asset that Japanese finance institutions are comfortable with financing, are there particular maritime assets that are particularly attractive or unattractive?
Well, to be honest, we like the dry bulks as the best because of the higher liquidity. And on the contrary, some offshore type of vessels they are difficult assets for us. But however, once again, we are now focusing on take a look at the cash flows from the project. So, well, now we are now developing ourselves to change the policies to finance not only those high liquidity assets, but also those are low liquidity but strong cash flow assets as well.
Thank you.
Well, sure. Well, for us, last year on the 10 ships that SBI financed, it was chemical tankers and container ships. So we're trying to focus on those two for the moment until we get more and more comfortable with it. So those are the two kind of ships that we financed last year, and that's what we're trying to focus on for the moment.
Matsumoto-san?
Yes. We are relatively flexible on the type of the asset because from the Jolco perspective, charterers credit is first priority. Second will be whether such charterer will exercise the purchase option or not. As long as the asset is regarded as a core fleet for them, we are relatively flexible. We deal with the chemical tanker, product tanker, methanol tanker, shipwood carrier, pure car carrier, LPG, and module ship, such kind of vessel, and also ferry, we close the deal. Only not acceptable for us the crude oil tanker due to the potential unlimited liability risk for investors.
Thank you. Hayashi-san, you want to?
We as an institution remain very neutral about the vessel types, but as Onaka-san said, being Japanese, I would be a bit patriotic about the country. We're the largest boat builders in terms of shipbuilding, so we give, in terms of our preferential ranking, bulkers, product, chemicals, et cetera, et cetera. And unfortunately for us, offshore is a no-go.
So let me give you the specific figures of our portfolio that might help to understand. In our portfolio, the dry bulk, well, share is approximately 32%. And container ship is now has been increasing up to 27%. And LNG, LPG, 21%, which has been increasing dramatically at this moment. And, well, crude oil tanker, 12%. And the PCTC, 8%. And offshore is approximately 1%.
Okay. Vetle, do you find there are certain assets which are easier to find